Namaste. We have earlier discussed about what do you mean by debentures, what do you mean by debentures issued as a collateral security. That was the last topic we have done. So, debenture is a document which acknowledges a debt raised by the company under the common seal of the company. We discussed. Debentures carry a prefixed rate of interest which is to be paid irrespective of the profits of the business, and the debenture holders are creditors of the company. All debentures issued in India are secured debentures and they are secured against certain assets of the company. These things we discussed. Then we discussed about what do you mean by issue of debentures for consideration other than cash. So, debentures, when the debentures are issued, when an asset is acquired or a business is taken over, then it is called as issue of debentures for consideration other than cash. The next one is when a loan is availed from a financial institution, the financial institution will ask for security. Now, the company will offer some fixed assets as financial securities. In case if the lender feels the primary security is not sufficient, the lender may demand for some additional security. So, when the company has to give some additional security, it might give some amount of debentures as additional security. So, the debenture certificate will contain the number of debentures which are issued as collateral security. It merely is a paper in the hands of the lender so long as the company is able to meet out its fixed obligations as and when they fall due. In the event of default on the part of the company to meet out the principal amount or the interest commitment and the primary security is not sufficient to cover up such losses, only then the necessity for these debentures arises. So these topics we discussed earlier. Now we shall be continuing with the same chapter to complete the rest of the three topics. So the topics for discussion for today will be issue of debentures and their recording from a redemption point of view, then debenture interest, concept of periodic payment, and a writing off of discount on issue of debentures or loss on issue of debentures. Now, to start with issue of debentures and recording the debentures from redemption point of view. Now, when the debentures are issued, the company has to be very clear as to by when the company is going to redeem these debentures. Please remember, debentures are to be repaid by the company as agreed. There cannot be any violation at all. So that being the case, the company must set aside sufficient funds for the repayment of debentures. So, while issuing debentures, the company will record in the books of accounts about the amount to be redeemed. Fine? Why? Because sometimes the company may repay the amount which it has received, like at par, they issued at par, redeemable at par. But sometimes the company may have to pay more if the company has agreed to do so. So, company might issue the debentures at par, but the company might have to redeem them at a premium. That means a price higher than the issue price will be repaid. So, that is what is called as redeemable at premium. The company might issue debentures at premium but redeem them at par or redeemable at premium. Similarly, the company might issue debentures at a discount but it can be redeemed at premium. Please remember, redemption of debentures at a discount is an unreal situation. It cannot happen. It is against the principle of prudence. Why? Because no investor will knowingly invest money that he will get back only less amount than what he has invested. Then he is not a prudent investor. Knowing that I am going to get only 90 rupees, I will not invest 100 rupees in the company now. Fine. So that being the case, redemption of debentures at a discount is an unreal situation. Now, this concept involves only journal entries. We are going to discuss different cases and the entries at the time of issue of debentures. So, debentures can be issued at par, redeemable at par. Debentures can be issued at par, redeemable at premium, which means the company will receive 100 rupees but repay 110 rupees or 120 rupees. Then the company may issue debentures at premium but redeem debentures at par. Issue at premium, redeemable at par. Company may issue debentures at a discount, redeem it at par. The last situation will involve additional loss to the company because the company is going to issue the debentures at a discount but redeem the debentures at a premium. So, 100 rupees the company receives, 100 rupees the company repays, issued at par, redeemable at par. 100 rupees the company receives, 110 rupees the company is going to repay, issued at par, redeemable at premium. Receives 110, repays 100 rupees, issued at premium, redeemable at par. Receives 110, repays 110, issued at par, redeemable at par. Receives 90, repays 100, issued at discount, redeemable at par. Received 95, repays 105, issued at discount, redeemable at discount. Now, what are the journal entries are we going to pass for each of the cases? Please remember, redemption of debentures is not there as far as the class 12 CBSE syllabus is concerned for the current year. So, that being the case, we will be passing on journal entries only at the time of issue. So, case 1, for every case, we shall be having 2 entries. 1, receipt of money. 2, transferring it to the respective accounts. So, issued at par, redeemable at par. So, what are the journal entries? Entry number 1, bank account debtor. 2, -% debenture application and allotment account. So, this will be application money received. And number 2 will be -% debenture application and allotment account debit. To -% debentures account. Debenture application transfer to debentures account. This is the first case. The second case, debentures issued at par, redeemable at premium. So the company is going to pay more amount at the time of redemption. Therefore, that leads to a loss to the company. So we create an account called loss on issue of debentures account. The entries will be, entry number 1 will be as usual, bank account debit to -% debenture application and allotment account. Application money received. And the second entry will be -% debenture application and allotment account debit. Debenture application and allotment account debit. Loss on issue of -% debentures account debit to -% debentures account to premium on redemption of debentures account. So, we create an artificial account called loss on issue of debentures account, which is going to match with the amount that is credited to premium on redemption of debentures account. -% debenture application allotment account will be the amount to be transferred to debentures account. Being same, entry narration will be the same. Application money transferred to debentures account. The third case will be issued at premium, redeemable at par. So the company is going to issue the debentures at premium, but the debentures are going to be redeemed at par. So the company will pass a journal entry as bank account debit to -% debenture application and allotment account. Narration should be very careful, and here it will be principal plus premium. So, application money received along with premium. The second entry will be -% debenture application and allotment account data to -% debentures account to securities premium reserve account. Application money transferred to debentures and premium. So this is for case 3. Now going to case 4. Case 4, issued at premium, redeemable at premium. So the company receives more and the company will return more. So case 4, we have 2 debits and 3 credits in the second entry. First entry remains to be the same for all cases. So entry number 1 will be bank account debtor to -% debenture application and allotment account. Application money received along with premium. So your bank account will be again principal plus premium. Now the second entry, the same, we are bringing in loss on issue of debentures account. So the second entry will be -% debenture application and allotment account debit loss on issue of -% debenture application account, debentures account to -% debentures account. 3 credits will come. -% debentures account to securities premium account to premium on redemption of debentures account. So, application money transferred to debentures and premium. So, this is case 4. So, you will have 2 debits and 3 credits. Now, case 5, issued at discount, credit redeemable at par. So, the company will receive less but repay more. So, it's a situation of loss to the company, but it's a loss which the company knowingly allows to happen. So, case 5, we have issued at discount, redeemable at par. So the entries remain to be the same. Only thing is the amount to be received will be less for entry number 1. This is case 5. Entry number 1. Bank account debit to cash percent, debenture, application and allotment account. Application money received at a discount. Case 2 will be, entry number 2 will be dash percent, debenture, application and allotment account debit, discount on issue of dash percent debentures account debit, to dash percent debentures account. So, application money transferred to debentures account. The last one, issued at discount redeemable at premium. This will involve loss to the company both at the time of issue and at the time of redemption. The journal entries can be of two different types. Entry number 1 may continue to be the same like this. Principal, bank account data to debenture application and allotment. Entry number 2 can be dealt in two different ways. So now we shall see that. So, case number 6, entry number 1, bank account debit to dash percent debenture application and allotment account. Application money received at a discount. The second entry, option A, dash percent debenture application and allotment account debit we are splitting between discount and loss on issue. So, discount on issue of dash percent debentures account debit, loss on issue of dash percent debentures account debit to dash percent debentures account to premium on redemption of debentures account. So, application money transferred to debentures account. Application money transferred to debentures account. This is case 1 method of dealing with discount on issue and premium on redemption. So we are creating separate account for discount on issue and separate account for premium on redemption. But anyway, both are lost to the company and both have same effects in the books of accounts also. So that being the case, we can also go for debiting both the discount and the loss on issue under the same heading as loss on issue of debentures account. So alternatively, the company can go for this entry also. Dash percent debenture application and allotment account debit loss on issue of dash percent debentures account debit. So this will be discount on issue plus premium on redemption to dash percent debentures account to premium on redemption of debentures account. So narration remains to be the same. Application money transferred to debentures account. So the last case can be dealt in two ways. Issued at discount, redeemable at premium. The second entry can be dealt in two ways. First method is a regular method wherein you debit debenture application and allotment, then discount on issue of dash percent debentures account, loss on issue of dash percent debentures account. You are debiting individually to dash percent debentures account to premium on redemption of debentures account. Alternatively, we are going to sum up these two and pass it as one single entry as loss on issue of dash percent debentures account. Only thing is we should be very careful to add both discount on issue and premium on redemption post together as loss on issue of debentures account. So, in this concept, we learned about recording the debentures from redemption point of view. So, debentures can be issued at par, redeemable at par, issued at par, redeemable at premium, issued at premium, redeemable at par, issued at premium, redeemable at premium, issued at discount, redeemable at par, and issued at discount, redeemable at premium. So, we have seen 6 different cases. Next, we shall see debenture interest, concept of periodic payment. Namaste.